our tax operations here at Doola. I'm a CPA. I passed my CPA, multiple years ago. I started out in the accounting practice at PricewaterhouseCoopers. Formed my own practice. I have expertise doing consulting, CFO work, and tax work for small businesses, nonprofits, startups, in particular, and multiple different crypto entities. So the overlap with me and my position here at Doola just kind of worked out, and now I'm kind of the head of tax here at Doola, and hopefully I can assist in any questions about startups or anything involving being a foreign-owned business here in the United States as much as I can. So just to kind of kick off with our questions that we've gotten over the last week. I know that, let's see, we have a question here that someone actually just asked in chat, but let's see. Yeah, Tanjil, I think we're covering your question first. So just to kind of reiterate, Tanjil said, I'm opening a single member LLC in Wyoming. He checked our videos here at Doola and figured out that he doesn't need to give any taxes to the United States. But his question is, if he doesn't have to give any taxes to the United States and pay any taxes, does he need to worry about any other formalities about taxes or the legal side of things here in the United States if he's opening up a foreign-owned US LLC? And if there are things he has to worry about, what are they, and do we actually help with them? So Tanjil, to answer your question, even though you don't owe taxes here in the United States, and this is a misconception I get from a lot of clients. We have multiple clients. I'd say a vast majority of our clients here at Doola do not pay any taxes here in the United States. They never will pay taxes here in the United States because they are a foreign-owned single member LLC. And they perform all of their business and all of their services from abroad, and taxes, we believe, for services should be taxed where you're performing the service. So what that means is, if you're performing a service from your computer and in your home country, we believe it should be taxed there, and it's not taxable at all in the United States. So that goes without saying. Even though you don't have to pay anything here in the United States, there are absolutely filing requirements that you must do every single year to stay in business in the United States and to actually have a legally compliant entity here in the United States. So one of them is the main form we file for our clients, which is Form 5472. Form 5472 is a big, scary IRS form that I think a lot of our clients are most familiar with, just because it is specific to foreign-owned US single member LLCs. Every single US foreign-owned single member LLC almost always has to file Form 5472 every year. And the penalty for not filing 5472 in the year is, it's $25,000 outright. And the IRS can assess that penalty anytime within a 3-year, I believe 3 to 5 year period. So we file that form for almost all of our clients. That is something obviously we include as part of our total compliance and as part of our tax and compliance filings. In the very rare circumstance that you actually don't need to file a 5472, meaning you had no transactions at all in the United States. You didn't deposit anything into a US bank account. You didn't withdraw anything from a US bank account. In that case, even if you don't have to file anything with the IRS, if the IRS, like I said, if they come back 3 years from now or even 5 years from now, and they ask, well, why didn't you file a Form 5472 in this year? They're gonna expect some kind of documentation, some sort of support to argue as to why you didn't file, and that's still something that we collect from our clients, and that's still documentation that we have, and that's still, even if there is no filing required, and even if there is no taxes to be paid, there's still documentation that we can collect to cover you in the event of an IRS audit, which can occur, essentially years after that year that you didn't file. So those are just a few of the things that are still required by a foreign-owned US single-member LLC that we perform here at Doola, even if you're not going to pay anything in taxes. So and let's hold up for 1 second. Sorry, I think my co-host is joining. And JP, I think she is joining right now, so maybe just give her the co-host ability once she joins in. And we may go over a few minutes today. That's totally fine, given the fact that it was a delay on our end. So just so everyone knows, I will be going through, as much questions as I reasonably can, and still, at the end of this call, going through the questions that were asked in chat and trying to stay here as long as I can to answer any of them. I think I'm fine to do that. Hey, Yami.
Hey, how are you?
Hey, JP, can you respond to the most recent message? I think has a max limit reached on the meeting. I am curious because we have stayed at a solid 21 the entire time. Oh yeah, so this is Yami. She's my co-presenter for today's kind of webinar. Yami, I already introduced myself, so there's no need to give me an intro. So maybe if you can introduce yourself and then kind of hop right into the questions, and I'll start to go over them again.
Yeah, so I'm actually the brand marketing manager here at Doola, and I've worked in the fintech space for about 2 years now. And yeah, excited to be here with Jiv, our CPA. Now
Yep.
you said you're on the second question?
Yeah, we're on our second question.
Perfect. So if I started an LLC in 2023, is it correct that nothing is due to be filed until next year?
Yeah, so essentially, and I think someone in chat is maybe attending today that asked this question, because I saw it asked in the chat earlier. If you started your LLC in the year of 2023, January 1st, January 2nd, anytime past, the first day of 2023, it is correct that nothing is due to be filed for your company in 2023. The way that tax years work here in the United States is that the tax year is the full year, almost always. So January 1st to December 31st of 2023 is the normal tax year. What that means is, for that tax year, for 2023, you're not going to owe any taxes for your LLC until spring of 2024. So if you're a multi-member LLC, your due date is March 15th, 2024. If you have multiple members, or if you're a partnership. If you are a single member LLC, or if you are a corporation, or if you are an S Corp, then it will absolutely be on April 15th, 2024. So it's always the next year. Just so everyone knows, you never have to kind of file an annual tax return in the year that you actually begin business. So.
Perfect. And another client asked, do we need to have tax compliance or tax assistance from the very beginning, or until we start operations? Is a CPA required to file taxes, or can we do it for our own business?
Yeah. Yes, so some business owners, and so it's kind of a complicated question because it depends on the type of business, right, and the type of business owner. For businesses where you're simply not familiar, for business owners where you're simply not familiar with accounting, not familiar with tax basis accounting specifically, it is going to be relatively hard as a foreign individual to go ahead and file US tax forms. I'll say that off the bat. So a CPA isn't required to file taxes here in the United States. A business can do it on their own. And if a business has a CPA on their staff, or some sort of experienced tax preparer on their staff, I do recommend, to whatever extent you can do it on your own. But for businesses that do not have that kind of, employee available, or do not have that kind of expertise, I highly recommend, going with, our tax assistants and our tax compliance, simply because, with having a CPA, and here at Doola, it works differently than, maybe some other places. At Doola, we offer, I believe in total about anywhere between 2 to 3 hours more during the tax season, but 2 to 3 hours of, tax consultations throughout the year. And what that means is you can hop on a call with a CPA. It's almost guaranteed going to be me, and we can talk about your business, and we can talk about, the types of transactions you're doing during the year, the types of accounting you're doing, and maybe the types of ways that you can save money on deductions during the year. And that's all inclusive kind of in our compliance bundling. And that's, included for every client who signs on. Normally here in the United States, if you have a CPA, and this is how I bill, even outside of Doola, we bill on hourly rates, and our hourly rates for a CPA consultation are relatively high. I mean, CPAs are essentially lawyers in a way for tax. I mean, not the exact same thing, but we defend you as representation to the IRS, right? So a CPA here in the United States per hour can charge anywhere from $75 to $100 an hour, and that's probably for a very, very low experienced CPA, all the way up to anywhere between $300 to $450 an hour for a partner in a decent, sized CPA firm. So just hopping onto a call to talk to a CPA has inherent value, and that's something that CPAs charge as, that hourly rate. But that's something here at Doola we include, and something we've been pushing for clients to use. Like, please reach out to your CPA, please plan for tax season, and please, before you do a massive transaction or do a related party loan or do a 0 interest loan, reach out to your CPA and ask how it's going to impact your taxes, because it very likely will. So to kind of in a very long roundabout way, no, a CPA is not required to file taxes. You can certainly do it for your business yourself if you have the experience. But, I highly recommend, having a tax, assistance from the very beginning, because taxes are one of those things where if you prepare earlier on, it's way easier in the long run. And then if, 4 years from now, you haven't been filing your taxes appropriately and you've grown to a decent size and now taxes matter a lot more, well, it's going to be a lot harder for a CPA to fix those prior 4 years where maybe everything wasn't correct because it didn't have a CPA reviewing it. So that's what I'd say there. I highly recommend having a tax CPA or a tax preparer to have as assistants, but no, you can technically file the taxes on your own.
Awesome. Another common question we get is, as foreigners, if we don't withdraw money from the US company bank account, do we still need to pay taxes?
Yeah, there is this very major, and sorry, my mouth is dry. There's this very major misconception, I think, with like, I don't know if it's something that's on these expat tax websites or like these, Amazon e-commerce, like tax help websites. But like, a lot of people seem to think that if you don't withdraw money out of the United States, then it is not taxable. And it's not taxable. If the money is just sitting there in the US bank account, there's no reason to pay taxes because you're not actually paying yourself anything. In the United States, that's just not how it works. It doesn't matter if you pay yourself or not. It doesn't matter if you pay yourself, any amount of money. If you're a partnership, for example, let's just to kind of emphasize how important this point is. Let's say that you enter into a multi-member LLC with you and one of your friends. Both of you are foreign owners, and you have a business in the United States. Each of you own 50% of the business. Let's say that you make in profit, meaning revenue minus expenses, $10,000 for the year, but you leave the $10,000 in the partnership bank account in the United States. And also for this example, let's just say that these two partners, for whatever reason, are taxable here in the United States because they're doing some sort of business that has physical presence here in the US. So they've made $10,000 of profit. They've left it in their partnership bank account. Each of them own 50% of the company. Neither of them have paid themselves any money. Well, how much in taxes do they owe? Well, the thing there is it doesn't matter how much they paid themselves. You know, they can pay themselves no money if they felt like it. At the end of the day, on each of their personal tax returns, both of those partners are going to owe taxes on their share of the profit for the year. So one will owe, you know, some percentage of tax on $5,000, and the other one will owe the exact same percent of $5,000 on their personal taxes, and they'll have to pay that even if they haven't paid themselves from their partnership. So it doesn't matter, you know, it doesn't matter if you've withdrawn money from your bank account or not. It doesn't matter if you've paid yourself any money or not. There's even examples here in the United States where a company hasn't made any physical cash and they still owe taxes because of, you know, certain types of non-cash deductions or credits or non-cash revenue, depending on how they account for their profit. So no, to answer that question, yeah, so my bad. So yes, to answer that question, if you don't withdraw money from a US bank account, you're still going to be liable to pay taxes or file for taxes, because in the United States, the amount you pay yourself just doesn't matter. It matters how much the business makes and how much you own of the business for LLCs. So that's a common question and probably one of the most common misconceptions, I think, from all of our clients.
I agree. Another client asks, is there a way to postpone filing taxes?
Yeah. So almost every major tax form in the United States, including Form 5472, you can file an extension and it'll give you a 6-month buffer where we can still file the taxes, and you know, you won't be liable for any, like, what's the word, penalties or interest or anything like that. We file extensions here at Doola automatically. The deadline for multi-member LLCs and partnerships here in the United States it's today. I still have about 6 to 8 partnerships or multi-member LLCs personally that haven't reached out to me. So we've automatically filed extensions for them. The issue is, even if you file an extension, there's no way to postpone paying taxes. Okay. If you file an extension to file your taxes, you have to give an estimate to the IRS on how much money that you owe them, and you have to pay that money. So even if we file an extension, you know, if you think that there's any money you owe to the IRS, that still is going to be due on your original filing due date. There is no way to postpone paying the actual taxes. So that's also something confusing about US tax law. I think even US citizens a lot of the time don't realize that that's how it works. Filing is one thing, paying your taxes is a different thing. You can file 6 months late if you file the extension. However, if you file the extension and you kind of have an idea of how much taxes you owe, you have to pay. Otherwise, it'll accrue interest and accrue penalties for the amount you don't pay, even if you filed for an extension. So that's just, I think, and I think that also answers the second part of this question too.
Perfect. And another question is, what forms would a fairly newly formed sole foreign-owned LLC that is not fully up and running yet need to file for this year?
Yeah, so it depends on their reportable transactions, and a reportable transaction doesn't necessarily mean income. It doesn't necessarily mean expense. A reportable transaction is absolutely, it is income and expense, that those are included in it. But it also means, you know, did you open a US bank account and did you deposit any money into a US bank account? Did you withdraw any money from your US bank account in the name of your business? Did you pay for anything on behalf of the US company through your personal bank account? those are reportable transactions. And if you have any of those transactions, even if you're not fully up and running, you need to file Form 5472 and Pro Forma 1120, which is, the main tax filings for single member LLCs. It's just a related party disclosure to disclose transactions like the ones I just talked about. Basically, the main support that I rely on there is I'll ask for your bank statements. If you've paid for stuff for the company on behalf of your own, credit card, I usually ask for personal credit card statements, redact everything that isn't related to the business. And then I just use your credit card statements as documentation to report that on your 5472. So that's those are the main filings for a foreign owned single member LLC. Even if you're not up and running, even if you have just one reportable transaction, you have to file with the IRS. Otherwise, in theory, they can, fine you $25,000 outright. So yeah, I think, we went over the time by a few minutes. JP, what do you think we should do? I mean, we can go through the chat and answer them. I can talk in response to some of the questions and talk about them, or I can get some more questions if I type in chat. It's your call. Okay, let's see. Let's try to find questions in here to talk about. Okay, Sarmad, we offer online website design services to clients here in the USA. We are based in a foreign country and are non-US citizens. All of the work is done outside of the US, and then we deliver it to clients in the United States. We have no employee in the United States. Are we engaged in US trade or business or not? And he uses the acronym ETBUS, which is engaged in US trade or business. Probably the most important part about having a CPA, if you're a foreign owned single member LLC, is the question of determining, are you engaged in US trade or business or not? The general rule is, if you're a online service provider or you do all the work outside of the US, even if it's going to US clients, it's almost always, at least here, we take the stance, and it's a somewhat aggressive stance, I think, compared to maybe other CPAs, but we take the stance that it is not taxable in the United States because it's not engaged in US trade or business. If you are based in a different country and you do online services or you do services outside of the US, even if it is to clients in the United States, if that service is technically being done from outside of the United States, it's not engaged in US trade or business, which means it is not taxable here in the United States. That is our general opinion. Obviously, each client is different. That's our general opinion for a lot of clients, just given their size and given their operations. It might be different if you're doing millions upon millions of dollars in revenue to US-based clients. Well, maybe our CPAs might think about it in a different way. But I would say in general, for most of our clients, if it's overseas service work, and even if it's to US customers, not taxable because it's not engaged in US trade or business is our general consensus.
Vera actually asked, for a new LLC registered in Indiana in May 2022 with expenses, but income less than $5, is filing required?
Yes, technically, if you have expenses, and I don't know how much the expenses are. I mean, even if you have income of $0, but have however much money in expenses, you do still need to file. I mean, technically, if you're a single owned foreign LLC, if you're a foreign owned single member LLC, you have to file just because of the fact that you have those expenses on your US, US income statement. So there is a requirement to file, even if you haven't generated any income yet. That doesn't really matter. What matters is the fact if you've had reportable transactions or not. And I would say that, oh, you're based in the US. It's really to your benefit to file because you can claim the losses on your personal return. So there's really no reason not to file. but you won't, there's not nearly as high of a penalty if you are a US based single owner of an LLC, because it goes through your personal return anyway. So, but yeah, Vera, I would still report it even if it was just expenses, because it saves money on your taxes here in the United States anyway. Let's see. To answer Christian's question real fast, because I think he's posted it twice, and I think it was one of our questions we didn't get to in the thing there. The Corporate Transparency Act has introduced quite some changes to LLCs. One of them requires a physical business address in the US, which is not provided by a third-party address provider. Doesn't that cancel out the disregarded entity / tax-free status of LLCs for foreign-owned one-man LLCs, as it will create an ETBUS in the US? So the thing about the Corporate Transparency Act, which what he's referring to is an act that was technically put into action January 1st, 2022, but hasn't really been fully enforced yet, is, basically what it states is, for the most part, you can't run an LLC or open a US business completely anonymous. You have to do something to disclose the ownership information. And according to Christian, I think part of the bill says that you acquire a physical business address in the United States, which is not provided by a third-party address provider. Personally, I have not fully reviewed the Corporate Transparency Act, and the reason why is because this hasn't been challenged or tested in the tax courts yet. And even though that this has been passed at the compliance level for our business institutions, the actual taxation part, and if the LLCs are going to remain tax-free, even if they have a physical business here or a physical business address in the United States, even if they don't really use it, that hasn't been tested in tax courts yet, and that hasn't been challenged on tax returns yet by the IRS. So my general opinion is, right now, there's still nothing to worry about. It might take some time, and this usually happens with laws in the United States. It sometimes takes a decent amount of time for them to be fully enforced and fully defined. And I think the Corporate Transparency Act is one of those, just because it has ridiculously far-reaching tax ramifications. So I would say right now, a lot of CPAs are still going to operate under the assumption that it is tax-free, and we're going to file and we're going to argue for that. And we're probably going to keep arguing for that until there's a real court case in the tax courts that say otherwise. Because, unless it's defined in tax courts, we will still keep operating under that notion. And ultimately, it's a new act and it's a new law. So, but yeah, that's a pretty important one. And honestly, I will look more into that, just because I wasn't familiar with that specific part of it, that is requiring a true physical business address that is, third party. It seems like something that would be challenged and probably clarified with an exception in tax courts. Yes, I would also not want to be the first court case that creates the precedent, but honestly, the first court case that'll be the precedent is almost, in my opinion, probably going to be a very, 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 high profile client, I would say, or a high profile company. That seems to be what happens. Or it's going to be a client that challenges it all the way to the IRS tax courts. It almost always won't be just a random, I think, audit in this case. Let's see. Sorry, I need to get my voice back. Print on demand products. I opened an LLC in 2022. Main activity is print on demand products. I never made any sales, had difficulty opening up a bank account. My company is a single member LLC, 100% foreign owned by me. The only transactions that I made were those of opening my LLC. Do I need to file Form 5472? Is there a way to make an extension with Form 7004? Yes, I would say that if you opened up an account and if you deposited any money into the US, or if you made a purchase on behalf of the company, like buying a doola subscription, probably, those would generally be reportable transactions and be worth reporting if they occurred after the business was created, right? So yeah, you would generally be responsible for filing Form 5472. And yeah, there is a way to make an extension with Form 7004. It's relatively straightforward, or you can, have us at Doola do it if you're on our tax package. We're automatically filing extensions for every company that doesn't have their return prepared or filed before the due date, for whatever reason, if they're too complex and we can't get them done before the due date, or if the client doesn't reach out to us, we still do our duty of care and file the extensions just in case. So let's see, I think and Yami, I think JP wants us to talk about the free consultation. And also, just for everyone here, I know that there are questions I didn't get to. If you are a Doola customer, especially, I think there are some questions earlier on that I think technically I'd want to actually talk about on a call, like Kareem's, for example. Kareem, I think if you can just reach out to our I don't know if you're a current Doola customer or not, but if you reach out to our contact, or book a free consultation, and ask that question again, they will ask it directly to me, and I'll have time to actually respond to you, just because I think your question requires a little bit more thought on my end, and I don't want to take up 10-15 more minutes. So but I'll let Yami talk about the consultation. And thanks,
Yeah.
everyone.
Thank you everyone for attending. JP actually dropped in the chat the link for a free consultation. So any questions we didn't get to today, you can ask it with the link dropped in the chat, and a live expert will answer all your questions.
Yeah, and I think we're still going to be doing this again next week. And just as a reminder, if you are not a single member, if you are a multi-member LLC or a partnership here in the United States, your due date for your tax filing is today. So if you have not reached out, please reach out so we can get an extension filed. And if you're not on a Doola tax and client subscription, then that's just a friendly reminder that your due date is today for multi-members or partnerships. So we'll be doing this again next week. So thank you, everyone. And if you have any further questions, like I said, just book the free consultation, since we're already, I think, over on meeting time by about 13 minutes. So you'll certainly get your questions answered if you book the consultation. So thank you everyone for attending, and we will be doing this again next week. Thanks.